Well, we heard a little bit about the FDIC in the last panel conversation, and turning to our regulators again, I am delighted to welcome Elena McWilliams, the chairman of the FDIC, who will be here to offer her insights as to the agency's central role in this conversation. Thank you, as always, so much for joining us.
No, thank you. The pleasure is truly mine, Chris. And it's been truly an enticing conversation and something that the FDIC has been focusing on quite a bit. So it's an honor to be here.
Well, I guess we can just hop into it from there. We had really started off the conference talking to the new acting comptroller and a little bit about the perspective there as a banking regulator. But how do you see the FDIC's particular place? It's always useful to kind of start from a 10,000-foot perspective. Given its mission in terms of the governance and support of MDIs, where does the FDIC fit in? How do you view the agency's role as being distinct from other essential parts of the government?
Well, let me tell you, no kidding. So here's how we look at this. At least here's how I started looking at this when I assumed this important role. And I say important not because of me, but because of the possibilities that the chairman of the FDIC can bring to this issue. As you know, the FDIC is the nation's deposit insurer for our banks, as well as the primary supervisor for the majority of banks in the United States, many of which happen to be community banks, and also the main supervisor. I would say we have the most MDIs under our supervision. And one of the key things that I did when I came to the FDIC on this particular issue, I basically asked staff, how are our MDIs doing? How are Black banks doing? How are Hispanic banks doing? How are Native American banks doing, and how are Asian American banks doing? And we generally split them into those categories. I know there are some others, banks that serve primarily immigrant communities, et cetera, but these are generally the categories we'll look at. And it became clear to me very early on that depending on geographic distribution of these banks, depending on the customer base that they bank, depending on the nature of the socioeconomic conditions in their communities, some of them are doing better than others. But in any case, the issue with facing the African-American banks in particular has been that they get small deposit amounts to the bank. And so when you get a small deposit amount from each individual depositor, and it costs you still the same, and in many cases even more, to service that account on a monthly basis, you're not approaching this from the economies of scale. And part of the reason is the socioeconomic conditions in the primarily African-American community, but largely also in the Hispanic community. And so I asked, what can we do as the primary regulator of community banks? Because the same good old things that we've been doing about MDIs obviously has not leveled the playing field. So that's, I would say, that in addition to a statutory mandate that we have to preserve and promote minority depository institutions, I took very seriously to heart. And I wanted to understand what the issues are so that we don't do the same old thing, so that we basically break that mold and do something a little bit different. Because if the same old worked, these banks would be by far more advanced in their standing in the kind of an ecosystem of the banking industry than they are today. So we did a number of things, and I'm happy to tell you what they are if I have an opportunity.
No, of course, please. No, I mean, it's really interesting, sort of breaking them apart. And we were talking about different kinds of aspects of demographics and the different kinds of challenges different kinds of communities face. And you're really continuing that conversation. And so this is really quite helpful. How did you approach, that kind of variance and sort of get the FDIC engaged?
So what I did first and foremost was to do extensive outreach to minority depository institutions. And so I met with different groups and I met with a number of African-American banks. And as you know, the number is not that high. It hovers around 20. And so I did meet with a number of African-American bank CEOs. And I basically said, tell me about you. Tell me about your bank. Tell me about your community. Tell me what I, as the FDIC chairman, need to know. And almost, I would say, almost ubiquitously, they told me, the main thing we need is capital, because, again, we're dealing with small deposit amounts in each of the accounts. Our base is what it is. Our communities are struggling economically for kind of decades, if not a couple of centuries. And so in many cases where these banks have been around for, we have a couple of them that are 50 plus years old, the issue has been how do we kind of address the systemic inequality that has existed for a long time through the banking channels. And capital was number one thing that they identified, and also the notion of kind of promoting the cause of these banks. Because unlike the majority of the banks in the United States, these are mission-driven banks, and their mission is not to necessarily, make a buck. Their mission is to help the communities that they serve, because in many cases, but for their presence, these communities would not have a branch or another bank in their on the ground in their communities. So through those conversations, it became clear to me that we need to pay higher attention, more emphasis on these banks, but not only to highlight the mission side of the mission-driven banking with the MDIs, but also to make sure that we put, our money where our mouth is. And so I was literally on a plane someplace over the United States, and I watched the Shark Tank. And by the time I landed, I said, I want a Shark Tank for minority depository institutions. And as you can imagine, the lawyers at the FDIC said, you want what? And I said, I want a Shark Tank. I want to create a fund. I don't know how we're going to create it. I don't know how we're going to fund it. But I want an opportunity for MDIs to come and make pitches to this fund. And then that's how they would get capital. And this fund would have to have what I like to call a noble mission, meaning being more mission-oriented than profits-oriented, but to be a serious fund. So as you can imagine, our lawyers scratch their heads, and the buzz around the FDIC is the chairman wants a mission-driven Shark Tank fund. So it took a little bit of nudging and et cetera, but we created a mission-driven bank fund, which is basically a fund that's created by the FDIC, but it's not going to be funded by the FDIC. We are going to put our name, our brand behind it. We're going to put our influence behind it. And then we're going to have private company investors investing in this fund. We're hoping to make it big. Right, make it big or go home. And we have an initial investment commitment of about $100 million from Microsoft. We're in talks with a couple of other institutions that are looking to invest. But I'm hoping that we can grow this fund to more than just 7 digits and 10 digits, and we'll see how far we can take it. We have also increased representation of minority depository institutions on our Community Bank Advisory Council. Right now, they represent about 1/6 of that council, so that the other banks, the non-MDIs, can hear about the mission side of the MDIs, and that there can be an exchange of opinions and influences. So it's something that we are really focused on as well.
No. That's really a very broad and agenda. Can I just ask one question with the new fund that you're creating? I mean, one of the themes, if one will, that we've heard throughout the day from really a very wide sort of variety of folks, including John Rogers, is this idea that, what are you going to use the capital for? Is this a kind of, when you think about the recapitalization effort, is this something to sort of bring these MDIs back to life? Or is this also, are we thinking about resources to help them modernize, particularly since, post-pandemic, you're now in a wholly digital economy? Are we thinking about how do we not only allow them to survive, but sort of compete?
Yes.
And especially when you have some digitally enabled competitors. I mean, how do you think about how you deploy those resources as you're putting together, that particular tool?
So we look at the fund as a holistic approach to the MDIs. So capital will be available to them through the fund. Technical assistance will be available through the fund. We're also exploring other aspects where we can allow non-MDIs to team up with MDIs in kind of like the partnership, where some of the technological experience and the IT services could be provided to the MDIs by non-MDIs, by I like to call them their bigger brethren. And so we're exploring in different ways, not just through the fund, but also through other channels. We created speed dating. I like to say this is not your grandmother's FDIC. So we put speed dating events throughout the United States in our 6 regional offices, where we put in the same room non-MDIs, larger banks with smaller MDIs. And we literally had them go around the table. This is the 6-minute dating to see if there is an opportunity for a partnership. And we're also educating non-MDIs, regular banks. We're basically telling them, listen, you can get CRA credit for this involvement, if you provide technical assistance, IT support, whatever else to an MDI, you can actually qualify for CRA. And not only are you qualifying for CRA, but you're going to do so much good in the communities that the MDIs are specifically focused on. So the fund is focused on the capital investment. There's a technical aspect and kind of a consultative aspect of the fund as well. But again, the fund will not be run by the FDIC. It'll have a professional fund manager. There will be anchor investors who are making some of these decisions. And we will have an observer on the fund board. But that's really kind of a thinking outside of the box. How can an FDIC, a government agency, engage in kind of a funding and providing the support and lending our brand to the mission that the MDIs serve?
Yeah, that's extremely helpful, and it's going to be interesting as well to just sort of see how that, for example, how that model compares to or contrasts to the CDFI fund. I mean, it sounds like there's a little bit more functionality in terms of how you're thinking about being able to use those resources, and obviously, seeking out some private capital.
And so, Chris, if I can I should be more specific. So it's available to CDFIs that are banks as well. So it's insured depository institutions that are MDIs and CDFIs. So we will have the plethora of and hopefully a good mix of CDFIs and MDIs eligible for the funds.
Absolutely. Well, you are and have been a speaker in the past at a number of our events, and I really want to continue this particular conversation in terms of thinking about the technology rails. We're about to switch over to our last speaker and finale, but I did want to thank you very, very much. These conversations require everybody from government pitching in, and you've always been very gracious with your time, and I want to thank you.
Well, thank you, Chris, and I have to thank you to resolve and solve these long-standing issues. We do have to think outside of the box, and so I'm excited to see that your last speaker is somebody who thinks outside of the box, and I look forward to the next segment.
Great. Thank you so much.
Thank you.